There is an unparalleled level of intervention in the markets right now. Every central bank is engaging in open market operations, some to a great degree, others not quite as much. The Fed has accelerated their activities and expanded their balance sheet. Oddly, some investors have denied this is happening and suggested it's only temporary. We've heard that one before too many times to be fooled by it. Even Bank of America is calling this new round of money printing exactly what it is, QE4. You came here for the truth, so let me unveil that for you. Today we have a few topics to discuss. First, I want to talk about the Federal Reserve. We're going to look at their balance sheet and other factors. I want to talk about real estate. I want to talk about a few subtopics within real estate. I also want to cover what's happening here in the automotive industry. We're going to talk a little bit about Canada, Mexico, and more. Let's get into it right away. QE4 to take central bank balance sheets to new highs. I want to make this very clear that this comes from Bank of America, and the red line is their projections for where they believe the balance sheets will grow to over the coming years. I think it will actually be a lot more excessive as all central banks decide that printing money is the way out, and so we will see it escalating just like it had been in the past few years. You can see this acceleration here from, let's say, basically 2016 or so and beyond, and then through 2018 we saw a big change, and that change happened to be a slowdown or perhaps even a contraction of the balance sheets, and this started to freak out the markets. They started to come down as a result, and we have witnessed the all country world index still not hitting the high that it did back in January of 2018. I've mentioned that 1,000 times. Now we're looking here specifically out of Bank of America and what they think is going on and going to be unfolding in the future. The reason I show you this here is specifically to note that they are calling the repo operations QE4. Look, you can say that this is repo operations is temporarily interjecting money into the markets. I get it. However, if they're going to persist for a long period of time, it is quantitative easing to some degree. Call it whatever name you want. I really don't care. If it's not quantitative easing, if it's not repo operations, if it's not a bailout, if it's not stimulus, use whatever term you find attractive. I really don't care. As far as I'm concerned, this devalues the currency in the same way, and we can call it whatever we want. I just went to the Fed website. Of course, you know this, the St. Louis Fed site, and I looked for the total assets of the Federal Reserve, and you can see something here. In the short term, we have watched the expansion of the balance sheet from this point here, which shows September 11th at $3.769 trillion. And then we move to this date, which is exactly 1 week later, September 18th, and that is $3.844 trillion, a significant expansion of the balance sheet after repeatedly reducing their balance sheet. This is a big change. Now I can bring this backwards here to show you, just to give you an idea of what had been happening. It's been going on now for quite some time. We've been following it on this channel. I'm sure you're aware of it as well. And you can see that this has been declining now for well over a year. However, something has definitely changed. Now, whether this is the beginning of a long-term trend, I really don't know. I can't confirm that, but Bank of America and others do believe that this is set to expand. Goldman Sachs included. I showed you that a couple times over the last few days. Now, your friends and mine at the Federal Reserve are always willing to input what they believe is going on. This happens to be a former top Fed official, somebody very important, in fact. And the reason that I mention this here is because this was a person who was at the top of these repo operations handling this type of work, so he would have some good insight into what's happening right now. His name is Simon Potter, and he has warned that the type of actions taken so far to quell this week's turmoil in money markets may not be enough to keep conditions calm, and fresh debt purchases may be needed. Remember this right now, because he may be foreshadowing something in the near future. This is essentially saying that they will need to engage in an official QE4 in order to maintain this system the way it is, and doing this temporary activity in the market is simply not enough. Potter cautioned that policymakers may have to expand the central bank's balance sheet through outright purchases of U.S. Treasury securities to ensure stable liquidity conditions at the end of the quarter as well as at year end. Now, of course, he's not in the Federal Reserve now, but it does give you some insight into what a central banker is thinking about this particular situation, so I wanted to bring it to you. And now we will look at real estate. 1 in 4 of New York's new luxury apartments is unsold. It's significant to see how much of an impact the slowdown has had on a market like New York. A quarter of the new condos built since 2013 in New York City have not found buyers. That's according to a new analysis of closed sales. We have the data and it is available for everyone to check out. If you want to know, then definitely read this New York Times article. They give you all the numbers. Before I move on, I just wanted to say, if anybody knows what this building is right here, you get 3 bonus points courtesy of Janet Yellen. Look at this. The inventory of homes listed for sale in Manhattan is rising. The darker line is Manhattan, the gray line is Queens, and you can see that clearly people are looking for more affordability, and that has resulted in this huge level of inventory piling up. People, especially with luxury homes, have been unable to sell. They've been staying on the market for a long period of time, and the costs simply add up for them. The share of listings in Manhattan which have reduced their list price is increasing. Take a look at this. It bottomed out in, let's say, 2014, and this has been rising, which now is at approximately 9%. This is a very good sign that there is weakness, softness in the market right now in New York, specifically Manhattan. U.S. home flipping returns dropped to nearly 8-year low in the second quarter of 2019. Now, this has come up in the shorter time frame. Now, flipping homes in terms of the total amount has come up in the last little while. However, specifically looking at the profit, this is down, and that is a very good indicator that this is not going to last. This is related to Canada, and I wanted to bring it up just to show you that the problems that are existent today, while they might be exaggerated in a particular sector or for a particular factor in one country or another, or in one city or another, but the point is that there are excesses everywhere, especially when it comes to debt. In 2017, household spending jumped 3.5%, while house prices advanced 13.57%. That trend comes partly from the collateral effect of homeowners finding it easier to borrow against their home, either through a home equity line of credit or mortgage refinancing when property prices rise. Does that sound like the Money GPS wrote that? It's exactly what I've been talking about on here, but there have been countless people, countless articles, countless individuals, even in the media, who have suggested this is very, very wise. I would not like to interject my opinion. However, when you increase the debt load, when you are engaging in activities that are risk-taking or increasing the risk level, ultimately the fragility will be exposed. It's only a matter of time. And the longer it goes on for, the worse the problem is. Borrowers use that money to pay for big ticket items like cars and furniture, or to fund renovations, among other things, which suggests this has likely contributed materially to this kind of spending in Canada in recent years. It is a religion in Canada to have an extremely large mortgage. The bigger the mortgage you've got, the better it is. Okay, you need a house that's so ridiculously large to keep up with the Joneses, not the Kardashians, but keep up with the Joneses. prices. And this, of course, is what everybody seems to be doing. And a lot of individuals, young individuals, millennials included in that, they have been unable to buy homes and have to buy condominiums, and those have gone up in price as a result. It's very likely to see that a normal size condominium in Toronto would run you $600,000 and up. If it's a really nice place, it might be $800,000. The prices are astronomical, and if you compare the median household income to the median home price, things are disconnected. I may have to do an entire video about this, but just wanted to mention it very quickly. We all know about the bail-ins. We've heard about it before. This story has evolved. I'll read it really quickly. Bond investors swooped in to buy Bank of Nova Scotia's first senior bail-in bonds in its home market on the first day after the deal was sold. Canadian systemic banks began building their buffers of senior bail-in eligible securities in September 2018. The bonds are designed to help prevent a repeat of the 2008 financial crisis when taxpayers worldwide had to rescue banks. Bail-in bonds are riskier, obviously, than deposit notes because they may be converted to equity in the event a bank runs into trouble. The market has been waiting for a deal from them for some time now. The resumption of investor risk on sentiments as we head into the fall will help bring back issuance into the loonie market. Well, this disaster will rear its ugly head at some point. I want to see exactly what happens in this case here with these bail-in bonds. Any investors who are buying these are in for a rude awakening at some point. These companies will not get to the levels which are supposedly sufficient, and even if they were, they are never able to withstand a crisis. It never happens, and yet here we are trying to create new schemes that are probably going to bankrupt more people than what we saw last time around. And then just wanted to add this in at the end very quickly. Mexico, one of the biggest exporters of vehicles in the world, experienced a 12.7% drop in total vehicle exports in August from a year ago. Mexico was feeling it. India, China, the United States, Canada, Europe, they're all feeling this right now in the auto market. We are watching this happening. There's maximum slowdown, yet the prices of these vehicles are not coming down in line with this. You would think that they would try to reduce their prices, that they would give more incentives. That really isn't happening. And this just shows you, just like in commercial real estate, for instance, where you have some of the best real estate in New York City, still keeping their prices extremely high, not reducing their rents. They think that this is temporary, but their expectations are never met. This is a global economic slowdown. I showed you a bunch of different things here, but understand that it's all interconnected. That's all for this video. If you found it informative, hit that like button. When you hit the like button, you're supporting this channel, so I do appreciate that very much. If you want to build a business, if you want to make money, then this is for you. The Amazon GPS is a free, 100% free e-course for you to check out step by step how to make money on Amazon, the AmazonGPS.com. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, A to Z, the foundation, the history, the asset classes, making money, so much more. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Hey now, where are you going? Don't go anywhere. You have to watch this video talking about the Federal Reserve and all of that, which we talked about today, going more in depth. Definitely click on it and I will see you there.